US jobless claims unexpectedly fall, but the markets brush it aside. South Korea holds its interest rate, and New Zealand's trucks show its production economy holding up, while data shows fewer migrants have been choosing to stay in New Zealand. That's coming up in our 5 Things in 5 Minutes on Friday, July the 11th. And then in our deep dive interview, ANZ Chief Economist for Southeast Asia and India, Sanjay Mathur, highlights which Asian economies he's keeping an eye on.
We are certainly keeping an eye out for Thailand at this point in time. Growth momentum has been softening for quite some time there, and quite rapidly. Too, the economy is growing below its potential growth.
But first, in 5 and 5 with ANZ, US jobless claims fell 5,000 last week to 227,000. Economists had forecast a rise to 235,000, although this year's data included the July the 4th holiday, so it can be volatile, and that meant that markets brushed aside those numbers. Stocks and the US dollar rose. ANZ economist Pansy Madhavani was focused on comments from the Federal Reserve Bank of St. Louis president, Alberto Mussolini, who says the US economy is in a good place, and the Fed needs to be focused on inflation.
On tariffs, he maintains that right now it is too soon to tell whether tariff-driven inflation surge will be one-off or persistent. His comments are suggesting that he is in the wait-and-see camp where majority of the FOMC policymakers seem to be at. His comments are consistent with our view that the FOMC will stay on hold at its policy meeting later this month. We are expecting rate cuts to resume in September, with the FOMC set to ease in a gradual fashion.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.4%. The 10-year US Treasury yield flat at 4.35%. Gold also flat at $3,326 an ounce. West Texas Intermediate futures, though, were down 2.2% at $66.85 a barrel. The US dollar index up 0.2%. The Aussie dollar up 0.7% at 65.81. And the Kiwi up 0.4% back over 60 at 60.27 US cents. Number 2, South Korea's central bank kept its policy rate on hold at 2.5% yesterday. ANZ economist Crystal Tan says the Bank of Korea is having to balance weak growth with rising financial stability concerns, particularly around the housing market.
The combination of subdued growth and also contained inflation does support the case for further policy support. It's also important to note that the policy messaging from the Bank of Korea today did retain an easing bias. There were 4 out of the 6 committee members, excluding the governor, that signaled an openness to a rate cut in the next 3 months, depending on incoming data. So what we're going to be watching for is what happens with US-Korea trade negotiations and also housing transactions.
Number 3, this week's decisions by the Reserve Bank of Australia and the Reserve Bank of New Zealand to hold their rates has moved the Aussie-Kiwi crossabout, as ANZ Head of FX Strategy, Marjabeen Zaman, explains.
Now, when we look at rate differentials, clearly Australian dollar or Aussie is expected to have a higher yield, a higher rate, and that will probably play into the view of a higher Aussie Kiwi. And that's exactly what we have seen. The hawkish surprise from the RBA at this meeting saw the Aussie move higher and sustain at slightly higher levels, while the RBNZ's dovish outlook has seen the Kiwi dollar struggle to make new highs or to move higher.
Number 4, monthly light and heavy traffic movements dropped a seasonally adjusted 1.3% in June, according to ANZ's Truckometer Index, reflecting lower activity. ANZ New Zealand Chief Economist Sharon Zollner says annual changes in the index show how New Zealand's economic growth drivers have been diverging.
The light traffic's up just less than 1%, but the heavy traffic's up 3% year on year. So that's consistent with what we're seeing in the economy as a whole. The agriculture in particular, but goods producing sectors more generally are doing better than the consumer economy, with retail and hospitality in particular still doing it tough. People are probably avoiding discretionary travel, just like they're avoiding all other kinds of discretionary spending where possible.
Number 5, New Zealand's falling net migration rate appears to be stabilising with a net 14,800 gain in the year to May. That is similar to April, but well down on the recent peak of 135,000 in the year to October 2023. ANZ senior economist Mathur says that while the trend may be turning, new signs of weakness are showing through in the data.
We've had departures hanging around at elevated levels as New Zealanders seek greener pastures overseas, and arrivals sitting well down from their peaks. And each month, net migration gets revised lower as fewer arrivals stick around and more people who we thought were going to leave temporarily stay overseas. So we're seeing it hanging around at pretty low levels for a while. A lot of the story of low net migration at the moment would be down to the labour market. The New Zealand labour market isn't really picking up as yet, and Australia's labour market is still reasonably robust.
Matthew Gold there. Now, in our deep dive interview, ANZ Chief Economist for Southeast Asia and India, Sanjay Mathur, runs through ANZ researchers' forecasts for how Asian economies will fare during the third quarter, at a time when we still don't have the full picture of ongoing tariff rates. He's talking here to my colleague, Alex Tarrant.
Q2 was, if we look at the sort of data, I think a couple of things stand out. The first is Asian exports did reasonably well, owing to front loading of activity. If you look at sort of the tariff regime in the US or what's been happening around it, we had the Liberation Day, then a pause, then hope that things would sort of get resolved. We'll now get tariffs back to what were announced in Liberation Day. But what it has added up to is that there has obviously been a front loading of exports. So we did see exports perform better than what we thought. On the other hand, domestic demand looks very subdued, both from the standpoint of the consumer as well as the corporate sector, which doesn't seem to be in any hurry to increase their capital spending. So going forward into Q3, I think that we will have a payback for this front loading of exports, and the subdued trends in domestic demand will continue.
What do you think growth will look like over Q3 then? And will it be even across the region or different between different economies?
Growth will be softer in the third quarter because the support we got from exports in Q2 would fade. There would also be a divergence in growth. We think that domestic demand-driven economies such as India and Indonesia and the Philippines, which don't rely too much on exports, they would probably fare better.
What do you see happening with currencies at the same point? And relatedly, how does this affect the monetary policy outlook or the ability to ease further across these economies?
Currencies have actually performed reasonably well, and that, I guess, relates to the theme of diversification we spoke of earlier. There is still a chance that central banks opt for weaker currencies or try their best to weaken the currency a little bit as export momentum fades. But net-net, I think the environment for Asian currencies is quite favorable at this point in time. We also should keep in mind that the dollar is weak, and that changes the equation for central banks in Asia. Earlier on, they were resisting rate cuts or deep rate cuts simply because the fact that it would weigh on their own currencies. But now with the weak US dollar, we think they are much more emboldened to embark on deeper rate cuts than we had thought at the start of the year.
Are there any economies that sort of stand out to you in terms of how their inflation or growth might perform, or, internal consumer demand within the region? Are there any that you're really keeping your eye on in terms of Q3 and in terms of risks around them?
We are certainly keeping an eye out for Thailand at this point in time. The reason why I point to Thailand is because growth momentum has been softening for quite some time there, and quite rapidly. True, the economy is growing below its potential growth. Now, thirdly, with sort of the political developments, etc., that haven't been favorable, that sort of could impede the passage of new fiscal spending bills, etc. So that would become an additional headwind to growth.
And then how important is the outlook for China at the moment, particularly given the tariff situation with the US and just those sort of integrated supply chains between China and other Asian economies?
So I think that relationship between Asia and China has become a lot more asymmetric over the years. What do we mean by that? One, China is not buying much of Asian goods. At the same time, because of China's competitiveness, they have been able to penetrate much deeper into Asia, not just in terms of competing in third economies for exports, but even impacting or feeding through domestic demand. And that has implied that it has become a deflationary force for the region, increasingly so.
Sanjay Mathur there talking to Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, July the 11th. Catch you next week with analysis of any of those further US tariff letters. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.